Welcome to Invested Insider, your trusted source for the latest financial news and insights. My name is Amelia Hawthorne, and today is the 19th of June of 2023. You're listening to our weekly financial analysis podcast, where we break down the hot topics on Wall Street for you. As always, I'm ready to guide you through the financial labyrinth, and today we're delving into the heart of the U.S. financial markets. First off, we've got an action-packed week ahead. Apart from our regular pause on Monday to honor the Juneteenth holiday, we've got housing market data, Jerome Powell's highly anticipated testimony before Congress, and a slew of corporate earnings reports to digest. Now let's talk about the elephant in the room, the S&P 500. After 10 consecutive rate hikes by the Federal Reserve, we saw the S&P 500 enter bear market territory in June 2022 for the first time since 2020. Investors, you remember the sting, don't you? But guess what? It's roared back to life. The S&P 500 is up a whopping 15% year to date. If there's one thing we've learned, it's never to underestimate the U.S. economy's resilience. The latest rally has been driven in part by bullish sentiment around those tech heavyweights we all know and love. Factor in some exciting advances in artificial intelligence and the resolution of the debt ceiling debacle, and you've got a market rally that's tempting even the most risk-averse investors back into the fold. Switching gears, let's check in with our friends in the bond market. The aggressive interest rate hikes have pushed the yield on 2-year and 10-year U.S. Treasury notes to a high not seen since 2007. That being said, bonds are still licking their wounds, with traders pricing in the chance of another rate hike. Looking at the greenback, it showed strength for much of 2022 but has started to lose some muscle. It's up 3.3% since the Fed started the rate hikes, but has fallen 10.3% from its 2022 high. Cryptocurrencies haven't escaped the bloodbath either. Bitcoin, our digital gold, has slumped by 33.2% since March 2022. But hey, it's not all doom and gloom, folks. Wall Street's financial wizards are doing their own bit of crystal ball gazing. Goldman Sachs, for instance, has upgraded its year-end target for the S&P 500, citing their belief that the economy is more likely to dodge a downturn in the next 12 months. Just last Friday, we saw U.S. stocks cool off a bit. But guess what? The S&P 500 and NASDAQ still posted their best weekly gains since March. Oh, and let's not forget the consumers. They're feeling more confident too. The University of Michigan's Consumer Sentiment Index figures are up, indicating a brighter outlook on the economy. So, there you have it, dear listeners. A fascinating week lies ahead. As always, be brave, be smart, and let's navigate these financial currents together. As always, do your research, stay informed, and approach any investment decision with care. Thank you for joining us, and we look forward to bringing you more insights in our next episode.
The Invested Insider podcast does not offer any financial, economic, legal, accounting, or tax advice or recommendations. The information provided in this podcast or on the associated blog should not be construed as investing or financial advice and should not be considered professional advice. The views, opinions, and content presented in this podcast do not represent the endorsement or approval of Invested Insider and assumes no responsibility for the accuracy or completeness of third-party materials or content referenced in the podcast.